Portfolio Builder members, we have an exciting 2 weeks ahead. Amazon is reporting on Thursday. The ECB, Central Bank, is going to give an update on their policy changes Thursday. And then next Tuesday, the Fed, Jerome Powell, speaks, and they may be lowering rates 25 to 50 basis points. That's what everyone's expecting. Many say if it's less than 50, it may let the markets down. In general, these have been the events that have taken the SPY ETF much higher. So I'm expecting a very bullish 2 weeks ahead after the consolidation we experienced last week. And so our Friday trade lost a little bit of money, but because we sold a call option and bought a put option, we dramatically reduced the losses relative to anyone else in the stock market. And so in general, that's our goals. When the market's going down, but we think the overall outlook is up, we reduce those losses. And in the event of a major crash, we have absolute protection. So also companies like Google, in fact, 135 companies are reporting this week, and we are officially in earnings season. So this will be a very exciting week. As long as the earnings are strong, I do expect the SPY to climb much higher in anticipation of lower rates into next week. Plus, we have rumors that our trade officials are flying out to China next week to further those talks. So if you think Trump wants to win the election, he has to have a good economy. He probably can't do that if we're escalating the trade war. So we'll see. And that's why we don't try to completely predict short-term moves. We're just set up for the big macro view. Right now, the banks are all lowering rates. That's bullish for stocks. So far, the earnings are staying strong. Microsoft just had a record-breaking profit, the top position in the SPY. Amazon's another big hitter. Google, I'm expecting them to have very profitable quarters. Google might be a little less strong, but time will tell. So the first step is to close out Friday's trade. So we were able to keep all the money on the call option. You can close that by buying to close the July 22 301 call. And we just about doubled our money on the put option. So from the starting point of 26 cents, it's now worth 54. So that is more than double. Unfortunately, we did not generate a profit when you look at what happened to the SPY. But go back to your analogy of doing the Airbnb in New York City. If the fluctuation of your apartment goes up or down a little bit, it's not a big deal. And we happen to be in a position where it's quite likely the SPY will break into new highs by next week, all in hopes of the Fed easing rates, which is almost certain to happen. So to close out the put option, you sell to close the July 22nd, 2019 297.50 put. Now, if you didn't take the Friday trade, you would skip this step and go to step 2. Step 2, for every 100 shares of the SPY you own, we are selling to open the July 24th, 2019 299 call for a credit of 34 cents. And we're buying to open the July 24th, 2019 295 put for 39 cents. The prices are going to be different. You may end up with a credit. You may end up with a debit. It doesn't matter. These are the important price points where Wall Street's putting their money. That's where we want to position our portfolio. And as you can see, we're not going to get rich from the call option we've sold. That's like taking candy from a baby in this low volatile environment and then plopping it into the put option, which will protect us against any bad surprises. So who knows what could happen, but if the SPY were to crater $10, $20, $30 in the next 48 hours, we would not feel any of that pain because we have the right to sell our shares for $295 no matter what. And that's what's so important about buying that put option. That's what makes this trade atomic bomb proof. So there will be no emergency alerts. Our maximum risk is $230. And our maximum profit is $170. So that's our risk-reward ratio going into this trade. It's called a collar. And again, the further the SPY goes up until a certain point, we make our maximum profit. And so that's about the $299 price. So beyond that, we kind of tap out and don't get to enjoy the rest of the ride. But on the other hand, if the market were to have a serious correction, which is certainly possible, markets are very stretched, very leveraged, valuations are at all-time highs. So just any little thing going wrong could cause some serious pain. And that's what will not happen when we're in a collar trade. So Friday's trade, we started off at 300 almost when we entered the trade. And the whole day the market just sold off, which caught me by surprise. But in general, we have to either pick up or down. And right now, we are positioned to profit from an up or flat move in the market in general with our trading strategy. Until something really negative happens in the earnings, until the US-China trade war shows escalation, we'll have to continue to have this stance because that's what happens most of the time. It's very rare the market really crashes. And so you'll see how we can just flip this trade upside down to profit safely and slowly in a long-term downtrend. But right now, that just does not seem to be the case. So the SPY went from 299.39 to 297.29 for a loss of $2.10. Our call option went from 21 cents to a penny for a 20-cent profit, and our put option, when I took the screenshot, went from 26 cents, sorry, I corrected that, to 54-cent credit for a 28-cent profit on the put option. And so we lost $1.62 a share, but we reduced the losses of the SPY by 25%. Now that was because we had a very bullish trade where we could have profited for about $1.50 if the SPY had gone up to 301. Of course, that's not what happened, and that's why we don't end up with these huge 80% gains. In fact, our real goal is just to safely squeak out 1% a month and to try to never ever have losing months. So far we've achieved that, but I'm sure there will be changes in the future that we don't anticipate 100%. So right now we are once again positioned to profit if the SPY goes up. If it goes flat, we're basically at a break even. If it goes up a little bit, all the way to 299 is where we really stop earning. And once it gets to 295, that's where we'd stop losing. That's where our maximum losses and our maximum profit. We stand to gain $170 a contract between now and Wednesday, and we stand to lose at most $230. So that's our trade alert for the week. And again, the reason we're maintaining our bullish stance is because the trade war seems to have de-escalated. It would appear Trump's focusing on the re-election now, and it looks like the Fed will lower rates. So with all these factors coming into play, we could get a big bubble forming in equities and bonds as this just continues to rack it up. Now, what's the big catch? Well, the debt is so big, we have to print money just to pay the debt. And this can turn into a nasty cycle after the debt gets over 100% of GDP, which is right where it's at right now. So we're carefully monitoring the situation. Some reminders. We have a live Q&A webinar for paid members Wednesday at 1 p.m. Eastern and Thursday at 1 p.m. Eastern for free trial or expired members. Trade alert schedule. We trade the SPY Monday, Wednesday, Friday at noon Eastern. No other times. We always have that put option below so we can sleep well at night and never ever have to be worried about waking up with a huge loss. Tuesday is our alternative trade alert for the SPY. Some people like to do only the Tuesday. Some people like to put part of their money in the SPY, part of it in the Tuesday play. This one's currently trading Apple with the same setup, but I have a little add-on for it. We'll be throwing the profit from Apple into a call spread on silver market. So I think that'll be exciting. A little add-on to help juice up the profits in our Tuesday trade. Thursday, we're doing the TLT with a call spread on GLD. That trade from last week was up 100% on the GLD, but it was financed with the caller trade on the TLT, the safe assets. So as you can see, we're taking the safest assets that are owned by the most people, the SPY, Apple, the TLT. We're putting a collar on it so we can't really lose much. And then we're taking some of the potential profits and juicing it up with the more exciting play. So on Tuesday, we'll be following silver, and on Thursday, we'll be following gold. Now, if you're ready to upgrade, call Dean at 505-322-7515 or Chris at 760-803-5335. And here's a quick look at our portfolio, sitting at an 8.5% return. And we've been launched for exactly 7 months, so we're outperforming our 1% a month goal very well. We've had extremely low drawdown. We are issuing out new spreadsheets to everyone. I've made a few updates. I'm now recommending that you have 10% of your total portfolio following our Bitcoin, gold, and silver holdings. So this portfolio had a very nice profit of almost 200% when it started off with 25K. So when we launched this portfolio, the Fed was supposed to be raising rates for most of this year. And in fact, that completely reversed course. So we'd only recommended a small 5% position in Bitcoin. And to our surprise, and most of the world's surprise, by February, they started to hint that they're going to reverse everything and start back quantitative easing. And now we're getting close to that point. So really next Tuesday will be the telltale sign if they're really going to reverse course from supposedly raising rates to now lowering rates. And the problem is, to fight a recession, it's typically taken a 5% drop in rates to recover from the dot-com bubble and the 2008 bubble. But that's not going to be possible this time around because we're only up about 2.5%, and they're already starting to drop the rates. So that's really scary sign. And with debt levels at all-time highs, you can really expect that they're going to have to print a ton of money. So we're becoming more bullish on gold and silver. And so this portfolio is something you can follow. It should be 10% of your total portfolio. I'll cover this more in the evening update, and you'll be getting a copy of your spreadsheet in the next 24 hours most likely. So that's a wrap. Tomorrow we have our Tuesday trade alert, and then Thursday is for the bond market. So thanks for your time, and looking forward to seeing most of you hopefully on the webinar Wednesday for paid members and Thursday for free.